Okay, I just typed up the 2017 market outlook for the Sure Group. I did one in 2016 that was pretty accurate, if I do say so myself. It's too loud up here on the second floor, so let's walk and talk for a minute, and this will also serve as a brief tour. So there's probably like 60 companies in this building at 3500 Boston Street in the Broom Factory, and we have storefront on the first floor where we're gonna go, which is right next to 7-Eleven and Qdoba. Adam, how's it going? So, I spent a lot of time figuring out what these trends are gonna be because my network, a lot of real estate investors, builders, property managers, we all get together and try to figure out, hey, what's gonna happen? Because all we can do is try our best to anticipate the market trends. And as a realtor, people ask me, so I need to know. So I've looked at a lot of different economic reports, consumer trends, stuff from big companies like Zillow, the National Association of Realtors, Swan Poll Real Trends. So I'm excited to share what I got with you. It's my favorite piece of art in the office. These were all taken by a photographer here in the building. Very nice. So you ready for the 2017 market outlook? Why don't you have a seat? The number one trend, and I have about 5 of them. Number one is housing market normalizations. There's some stability with the month's supply of inventory. So what that means is buyers have a lot of inventory to go out and look at, which is good. And at the same time, sellers can sell their home in a predictable amount of time. It's a pretty balanced, normal, healthy market. I said this in 2016 and it kind of slowly became true, and now it really is kicking. We're also seeing a steady rise in home values and rents. So home values are going up by around 4 to 6% in the greater Baltimore metro area. But essentially what that trend means is if you have a normal market condition, it's kind of smooth sailing for the buyers and for the sellers. That means less volatility, which is good. People want to feel safe. There's without a doubt a rising interest rate landscape. People have been saying this for the last 7 years, and it's time to stop crying wolf. It's legit, it's happening. Interest rates went up by about 0.5 point in the last 90 days already, and it's gonna continue to rise. The interest rates are tracked closely with the 10-year Treasury, which are United States bonds. That is totally different from the overnight rate that comes out by the Federal Reserve. So what the Federal Reserve is saying is they're anticipating a 1/4 point increase every quarter. That's a game changer if you're looking to buy a house, and right now you can get 4% and next year it's 5%, or right now it's 4% and in the summer it's 4.5%. That can raise your monthly payment by a couple $100. One of the reasons you're waiting to buy is to find something more affordable if there's any financial concerns. It's a good time to start diving into the reasons to buy versus continuing to rent because it's only going to get more expensive. The other thing on interest rates is with some of the banking deregulations we're anticipating with the current fiscal policy coming into a new administration, it's going to make it more affordable for some people to buy homes because there's going to be some more exotic mortgage products. And we've learned our lesson there as a country and plummeted the whole economy into an oblivion when we had some mortgage-backed securities issues. If you haven't seen The Big Short, you should check it out. They go into that quite a bit. But that's going to come back around with loosening regulations. Third trend is we feel people are going to overcome the analysis paralysis with the rent versus buy scenario. There's so many people watching this video and in general who are renting who probably can afford to buy but decided not to because they want to continue to rent, and that's going to really drive some demand. Second to last is the millennials and the boomers are going to really prime the engine for this market. So the millennials are going to dominate the first-time home buyer market. They're probably going to come out and actually pull the trigger and buy homes this year. And there's also a ton of baby boomers who own properties. Baby boomers own about 35% of the real estate population, and they have changing lifestyles going on right now, whether it's they're becoming empty nesters or they want a second home. So that leads to what is a fancy term called multi-dimensional transactional volume, which essentially just means they're going to be buying and selling more than one property, or they're going to sell a property and buy another one. That's a big driver in the market, as well as people moving from renting to buying. Forget Gen X and Gen Y. It's all about the millennials and the baby boomers. We feel like in 2017 are going to have the biggest impacts. And this is not political at all. This is strictly real estate related, but we as a community have no idea of what President Trump is going to do. So some questions I had is, we all know he has a heavy real estate background, so there's probably a likelihood that it's going to end up being a little bit more positive than negative. But what will the loosening of these regulations do to demand in the real estate market? He has a plan for $550 billion in transportation and infrastructure. Will that drive demand in certain markets? We all know he's big on jobs. Will that drive demand? We don't know. He's publicly been very critical of the Federal Reserve and Janet Yellen, so what is that going to do with interest rates? And then Fannie Mae and Freddie Mac, these government entities that control and hold all these mortgage-backed securities, all these things can have a significant impact on the real estate market moving forward. Trump presidency, everyone's kind of like, who knows? We think it's going to be good just based on loosening regulations, a favorable fiscal policy, but we don't know. So on this video, check out, I'll throw up my notes. There's just a couple quick bullet points here that I typed up. And then this is pretty interesting in the greater Baltimore metro market that I mentioned. This is where all the properties get listed, all the data gets listed, and that's where Zillow and Realtor.com and Redfin and Trulia pull data from. This is the database. That's the database we use, and this is where we get a lot of our information. If you have any questions about that, please let us know, and until next time, thanks so much for watching. Oh, by the way, I forgot to mention one interesting thing here in the Baltimore metro market. Home values are increasing at roughly 4% a year, which is pretty high. And there's so many people who are so afraid of what happened when the market crashed in 2007, 8, 9, and everything plummeted. Well, if those people held on to their house, and a lot of them did, they're back. You didn't lose anything. So all that fear and worry about the market and what's going on, you're back. What you bought the house for in 2007, you can sell that house again right now for around the same price. So it goes to show you, real estate is a long-term play, and it's a real hard asset that is very different from many other asset classes. So I'm going to make another video shortly about real estate as an investment, and I think it'll be worth tuning in. Thanks, guys.